Okay. That is a strong AF GDP number. 3.8%. That's a huge beat. And again, US economy, it's been a theme for the last 4 years, guys. The US economy just like finds a way. It's amazing. That's crazy. Why are stocks lower? I'll tell you why stocks are lower and why this didn't rally the stock markets, because the stock market is so weird right now. In my opinion, it's like praying for bad data so that it can get rate cuts, which I've always equated that to the analogy of it's like hoping you get sick so that you can take medicine. I think that's like a dangerous way of thinking. Dollar index is firm. I think a higher dollar and a higher oil price. I'm probably going to get long oil here in just a few minutes. I like that trade quite a bit. I think oil has upside. To help me with this conversation, though, we are going to be transitioning and bringing in some big guns. We've got the one and only Chris Pulver joining here. Look, I got my little up next Chris Pulver in the top right. Look how handsome and dressed up he looks. And now we're going to get the real version. Let's see if he looks. You guys tell me, does he look exactly like he does in this picture? Let's bring him in and see. Oh, hey, Chris.
Hey, good morning. How's everybody? How are you, Nick?
I'm good. What a GDP number. Did you see that number? 3.8%. That's wild.
It's hard to take the news without like having to just what are the prices in the charts telling you before the news even hits?
Yeah.
We've been looking for this rollover for a little bit. It was funny that in the last probably month or so of like, yeah, watch the technicals, pull back to the 21 period moving average, the 50 period moving average. What did I not talk about? The U.S. government shutdown.
Yeah.
So there's always something. Obviously, Powell had some statements this week. I mean, he was speaking at like a Chamber of Commerce event in Rhode Island, and that was enough to like put him, a hot mic moment. No, he was speaking, but it's like that wasn't FOMC. This like volatility and rollover. It's like, now we're gonna push into all-time highs during FOMC, and 2 days after FOMC, hit the 100% breakout level and then roll over.
Chris, I think he knows what he's doing sometimes with that stuff. Sometimes everyone expects him to say something at the big ones, and then there will be this like sideshow, and he'll drop a bomb. Like, well, actually, that was maybe worth talking about. In 1996, the standing chairman, Alan Greenspan, called the rally in stock prices irrational exuberance. That was 1996. We didn't crash for 4 years later. The stock market just ripped, and it actually quadrupled from that level in the following years before having a massive crash. In Powell's commentary, he said stocks are highly priced, essentially.
Highly valued.
Is that an Alan Greenspan moment, or do you think Powell might be onto something? I don't know. I feel like history never repeats exactly twice. Like Powell could actually be right. Like he could actually be saying the conditions in the economy are challenging to justify stock valuations. But what are your thoughts on that?
Well, I mean, I think by historical measures and what we've seen in the past, I mean, we're talking about like the Cape-Shiller ratio where things are crazy high. We're talking about .com level valuations. I do hear the saying quite a bit. It's different this time, which in ways I think that it is. I think that the profitable companies that have led us into having, a Mag 7, led us into like the top 10, top 20 stocks that have 30, 40% of the market cap. They're very profitable. So it's hard to fight against those companies as opposed to, how many tech stocks during the .com right before the bust, of course, how many were trading at like 100 times earnings? A lot of them. We're talking about 20 to 30 times earnings, but you look at the indexes, the higher valued stocks that are huge, and we're talking hundreds of billions of dollars, trillions of dollars in market cap, they're at like 25 to 29 times earnings. But based on the, Buffett indicator, based on the stock market valuations, what I keep going back to, and we talked about this in an earlier session this year, forward returns are going to be probably not as awesome as people think. If you look out 3-5 years, it's like you can have a steady, stable stock market. But I mean, Nick, if we have another year that produces double digits, we're probably going to go sideways for at least a second. I mean, we've got to go sideways to like 20 plus percent in 2023, 20 plus percent 2024. We're at 13%. Nasdaq's up, 16, 18%. Like those are insane rips. And it happened right before we had a bigger pop last time when it was like 2020, 21, and then it fell when it was, in the 90s, we had these create. So it's different. I mean, I don't think that the modern market in 2025 is going to, behave as wildly. I think there's also more, there's more protocol, there's more circuit breakers where prices will probably not have the same type of, behavior, but it does make me want to stay out of unprofitable things. So like, I get a lot of questions like, Chris, what about this stock? And there are stocks that I've never heard of. That's just like some random semiconductor company or some random quantum computing company, some random AI.
This Big Bear AI. You've got Palantir, of course, these high flying names. And maybe the ETF we could talk about is, of course, ARK Innovation ETF. This is Kathy Wood's fund. And, it's notorious for having a lot of unprofitable tech stocks that are sort of tomorrow's, stuff invested in today. But yeah, I mean, I agree. I think stocks, and actually, Chris, I'm working on, I've got one of our behind the scenes team members is going to start doing some research for us, which I think is really exciting. Like, for example, that concept that you just mentioned, like 10-year forward-looking returns when you have PE ratios above certain levels. Like, I'd love to have a chart like that. So I think that would be cool to have presented to us, sort of a chart of the day or research of the day. So, but yes, for those interested in what Chris was pointing out, that is something I saw the study too. When you have valuations at very, very high levels in the short run, it's super unpredictable of what the market's going to do. Like if you have a high valuation in the stock market, it can keep going higher, but over the next 10 years, like over a longer stretch, it typically does not bode well for asset performance when you have very high valuation. The reason for that is because everyone's expectation is really high. It's hard to keep pleasing investors when everybody is sort of fed such an amazing platter of options already. You know what I mean?
Yeah. Yeah. And, we're not going to know, if this market's going to roll over a little bit, we're not going to know whether this is the time to get out. Or we left holding the bag? It's like, I'm still a buyer of these dips. I think this has been a long overdue dip. I think the market still has the capacity to get up to 7,000, maybe 7,500. I think we look out 5-10 years, it's probably creeping up towards 8,000, 9,000, 10,000 S&P 500. But, I'm deploying a lot of strategies that will allow me to brace for volatility along the way. I'm not joking. Like, I mean, you and I've had some sessions here together the last couple of weeks, and I've been very vocal, and probably more so, like, my risk is to the upside right now, at least in my short-term positions. I kind of was calling the top, and I did it out to the end of September and into early October. I am peeling a lot of those trades off for profits now, and that's finally good, because I was like frustrated with, like, especially FOMC. I get the contrarian play, and you and I talked about this last week. That big jump in sentiment was kind of all of the additional confirmation I needed to be like, okay, if this market's going to actually like roll over, it's like when everyone's finally off the fence and finally starting to show bullishness. And speaking of that, what did AAI print yesterday?
That's a good question. Well, let me see what we've got.
We went down. So we had same and bullish sentiment of 41.7. The neutral went to 19.1, but the bears dropped to 39.2.
Yeah.
Yep. So
okay.
A bit more bullish. That's good.
So you mentioned, I mean, I kind of feel the same way. I still think that the place to still be is still long equities and indices. However, we are getting sort of what we've been hoping for, a little bit of a pullback. I guess my question to you would be, how soon do you step into a rat? Like if you feel that the potential of the market is to keep going, to make that push to 7,000, maybe not by year end. I mean, maybe by year end, who knows? But if you were sort of looking at this, where do you start getting intrigued actually into leaning in and deploying something? Would it be, are you talking about like a 4% pullback, 3% pullback, 10%? What starts to like pique your interest for stepping back in?
I try to keep it really, really simple. I mean, I've been eyeing these moving average levels for literally weeks, probably a month plus. And so looking at the 21 period moving average, that's like minimum target to at least, start to participate. Even through the melt up we saw through late July and August, the 21 period acted as support. And if we come back to that, that's still, that's 56, 51. That's almost another 100 points lower. The 50-day moving average This is like the fourth or fifth all-time stretch away from the 50-day all time. That's a lot. And I think this is another one where, depending on how this plays out from down to the 21 up for a fail, down to the 50, is that enough? Maybe, right? Maybe that's enough. But if we get, and what obviously can happen is like this can snowball and cascade into some really ugly price action. And maybe we have like a 4, 5, 6% quick correction. And then if we bounce off that for a lower high, it's this second leg that always scares traders, because most people have been hedged as this has been climbing up. Most people are hedged, have some protection, and you're losing on that protection because the market refuses to go down. But if we have a leg lower and maybe take off some hedges at that point, it's the potential leg that's one more leg or third wave down. That's when nobody has that nobody wants to pay for that extra protection, because it's, VIX is up, puts are more expensive. So fortunately, I've got hedges that are already out to December, already out to, April and June of next year. So if things get really bad, and also on this higher time frame, I added in a couple of moving averages here. This is a 21, 50, 100, 144, 200 moving average. I look at those right now as big support levels. Do I think they get hit? Do I think we hit the 200 moving average and find previous all-time highs from 2020? This would be what? 2025? Am I way off here? Why? This should be like, what? Oh, yeah. Okay. I was like, I'm getting my timelines confused. So February all-time highs. If we come back to that level, I can see that technically being a good level of support. I added in, if you look at the SPX on a monthly chart, I added in, this is something that Funstrat uses. This is Tom Lee and his partner. I can't remember his partner's name. I just listened to a session with him last week. Anyway, the 10-month moving average. Let me bring up let me see if I've got a blank chart here that maybe has a little bit cleaner. So let me put in indicators. I'm just going to use an exponential. So exponential moving average, and add in, we'll go to a 10 period and change it to a monthly. And I just want you to see here on the monthly time frame with this added in. Let me make this a big, obvious style. Let's go nice and thick. All right. So on the monthly time frame, anytime we've seen prices close below this 10 period, obviously there's some times where it pulls back and the market has to make a decision. But anytime it's been closing below or closing below and staying below, it's been a great time to stay out of the market. So until we have pullbacks closing below here, it's like, I'm buying the dip, dude. I think it's that simple. So don't overcomplicate it. I mean, a time for short is fine. I trade this market every single day. So obviously the last couple of weeks, I've been more bearish. I've been like, this market has to pull back. This is driving me crazy. I did a macro dive into like, what is the longest time away that we've had on the 50-period moving average? Turns out it's 128 days, but it's never gone over 300 points higher. And we were at 280 before the July correction, and we were at 270 just over the Fed. So it's like we're getting up to those like high levels. Plus we have like 100 bar count. 102, 105, 112, 128 are the top four. We're at the fifth all-time stretch away with the market that refuses to go down. So, I'm just saying, I'm lucky. I'm lucky on the timing because, maybe I've done this a few times just like you have. But I also thought I could totally be wrong, dude. My timing could be way off, and it's like maybe this thing is October 17th or October whatever, and I'm like, I'm going to be off by a couple of weeks. I'm going to be so angry, but I'm thankful that the market has actually rolled over in these last couple of days.
Yeah, and I think it just gives us something to be constructive with. I'm sitting on a lot of cash, Chris, and it's not. It really is not. Sitting on cash as a bear. I'm sitting on cash just because I think that you've had an incredible. Like sometimes people equate sitting on cash or being defensive as, oh, you're totally bearish. But what it also can just mean is it means that you've taken some profits off the table. I mean, how have I gotten cash heavy? Well, I sold covered calls on a bunch of stocks. And so I've had a lot of those calls get blown through, which obviously is not ideal per se, but what does that equate to when you get called away? It's taking a profit. So I've taken a profit on a bunch of stuff here. I got called away from Google, which again, I love those companies, but you can love something and let it go, right? And then wait for it to come back. And if it does, great. If it doesn't, great. You know, like Tesla, I told you about my trade on Tesla. So here is a great example. I know not everyone in the audience trades individual stocks, but it is reflective to kind of everything, right? This, you could equate this to the Nasdaq. The Tesla is practically a leveraged Nasdaq these days, but I bought Tesla during the April sell-off because I thought that the panic that was happening there was not going to be forever, and that ended up being the right call. What has not been such a great call is I've been selling calls, making good money in premium, and then this leg happened, which essentially has gotten me to a point where I'm going to close out for $400 a share and $355 a share respectively. It's almost $100 from where I sold that call. So not great, but hey, you know what? That's a profit. I bought it over here. I did really well with the shares. I think I'm up like 70% on the shares, and then I've collected a bunch of premium. So I think it's okay to say, hey, you know what? There's a point to let trades go. I also, this is why this stuff is so hard, Chris. I went long silver. I did really well with silver. I essentially bought right here and I sold, unfortunately, right around here. I trailed out. I had this level of structure on the 4-hour chart. When that broke, I just said, all right, I'm going to take a profit. And sure enough, it rallied higher. The point is, you don't have to be perfect, right? At the end of the day, like silver could have a whopping, 15%, 20% correction in the next, 3 weeks. You don't have to be perfect. So that's the thing with all of this stuff is manage your risk, be prepared for market volatility moves. And you're going to have this feeling, like we all have this feeling of like, dang, did I miss, even if you're like, I'm long the Nasdaq and I've done incredible, but so-and-so is long Palantir this year and they've made, 400%. Like you can always do that to yourself. But what you really rather should be doing is, okay, that's the past. How can I prepare for now in the future? And what am I going to do? So I'm with you in terms of momentum. Momentum is like one of the most observable things frequently tested in markets and shown over time to be a strong factor. So that 10-month average thing that it lines up right with the research that I've seen across many different historical studies on specifically indices and stocks, which is something in momentum tends to stay in momentum. So if you give a couple more days to the downside here, I am probably going to start dipping my feet and start looking at some stuff. Is it high? Sure. But again, let me just put some context to that thing I said earlier about irrational exuberance back in 1996. Just for people, this is just a quick history lesson. Chris and I have done this 7,000 times, but okay, this chart only goes, let's just do SPX. So if I go back monthly chart to 1996, this was the year.
That chart is insane.
Yeah, this is the year I was born. Actually, he said that, Chris. This is just like weird. He said that one day before I was born. So he said December 6, 1996, Alan Greenspan said that he thought stocks were irrational exuberance. Their prices were way too high. And look what happened. That was the Fed chair. That's like Powell coming out and saying stocks are too high. Look what happened for the following few years. You had just nothing but upside. The stock market just continued to go and go and go. So momentum is a real thing. And we've talked about this. Another thing we've talked about many times, Chris, is the idea that the Fed's cutting rates and things aren't falling apart yet, right? So we have to keep an eye on that. Jobs data is weakening, but we've talked about this a lot too. If the Fed cuts rates and, it's because the market is falling apart, that's different than the Fed cutting rates where things are still holding up okay.
Yeah. I mean, I took a screenshot of this. I don't know if I asked you this question, but over the course of 3 months, 6 months, 1 year, 3 year, 5 years, which environment makes stocks perform better? If you have a rate hike cycle or a rate cut cycle? Did I ask you that question?
And I'm going to guess it's actually a hike cycle.
You're correct, but it's negligible because if you look out 5 years, a hike cycle is at like 64%. 64% gains after 5 years on the S&P, and a rate cut cycle 62%. I mean, it doesn't matter. It's like the market's still going to go up. It doesn't matter if it's Republican or Democrat. Market's going to go up. It doesn't matter. But what we will be dealing with is some flushes of volatility.
Yeah.
I mean, I don't look, the US can't afford to go into recession. The global economy can't really afford to go into recession. Everyone wants this doom and gloom. Everyone sells newsletters on bear porn. It's like, it doesn't happen that way. Like, this market has been gamified, financialized. It's there's too much leverage in the system that I think a deleveraging would make some sense. But look at all of the V-bottom corrections we've seen in the last decade. We've seen a lot, man. Since 2015, we've had like 7 corrections of 20+% or more, and we're still at all-time highs.
Yeah.
It's still going. So yeah, it's
Yeah.
buy the dip. I mean, don't be 100% in. Buy the dip. Learn some sophisticated strategies. Give yourself some forgiveness and room for error. And I think that stocks will remain resilient. I think that, I mean, we're talking about like this massive technological boom or innovation, which is like AI is changing the world. Whether you are embracing it or you're hoping it goes away, or we're going to mess it up, or it's too smart, it's too dumb. Nobody knows. But the market is forward thinking, and even 6 to 8 months out, that's like, this market's probably thinking 2, 3, 5 years out right now with AI. Yeah. And it's not something we should fade. I think that fading AI is stupid. I think that's ridiculous. You're just going to end up losing money with especially tech stocks that will rip your face off. So anyway,
it's one of the most common things that a lot of, genius investors, traders during 2000, what's the, like, Drunken Miller made it, like he says, like his biggest
Miller gave
mistake.
up. He was wrong. His
biggest mistake was shorting tech stocks in in 2000 or whatever. Even though he was ultimately right, like, hey, they were overpriced. Yeah. Timing it is just so silly. It's so hard to call the top on these sorts of things. Now, granted, I like the point that you made there. Okay, so if we're not going to fight it, if we're looking for pullback opportunities, it's not necessarily like all in. If this thing does drop, it's going to drop hard at some point. We don't know when. It could be, it could be this year, it could be next year, it could be 3 years from now, it could be 5 years from now, it could be 10 years from now. Nobody knows exactly when the stock market, which is, full of stocks growing over time, it's hard to call the top on that. But what we can do is we can wait for dips. We could be patient. We could build a plan that has risk management associated with it. Whether that means for you, it might mean, stopping out. It might be diversification. It might mean keeping cash when we are above certain levels. There's other ways than trying to short the market to be prepared for a larger drawdown if it were to occur in markets. So I think, one of the ways we could do that is we could look at international stocks. I saw a study that in 2000, 2001, many foreign stock markets actually continued to move higher, even though the U.S. tech stocks completely got obliterated. There were other countries that had stock market appreciation in 2000 and 2001, 2002. So, there's ways to look for momentum where it exists. Momentum is cool because there's always something that has some momentum most of the time. I mean, maybe not always, but most of the time you have something that's moving nice to the upside or to the downside. And that momentum, if it breaks in US stocks, a true trader can adjust. They can look for momentum in another area and not be so. The mistake I think people will make with AI is they will chase it continuously with leverage and with more and more sizing, and then they'll get in trouble. That's where you can go wrong with it. But where you can go right with it, in my opinion, is wait for dips, buy constructively, don't go all in, but don't try and fight new technology. That's been a difficult trade over the last 10,000 years.
Yeah. And if you want the boring stuff, if you want, like, I think a safer, less volatile play is good old energy and utilities, because ultimately, in order to build this AI, in order to build this infrastructure, these data centers, whatever we're trying to imagine for the future, we're going to have the energy to do it. And I think that's probably our biggest bottleneck, which with Trump as president, this administration, we are deregulating, we are encouraging build, grow. And that's good because we're not trying to thwart or deter the growth. And I think that even boring stuff like ExxonMobil, Chevron, even XLE, XLU, like those are fine to play for proper sizing, and they're mostly like value driven. I think that valuations are a little overcooked anyway, but there's upside potential. And if you get a dividend on top of that plus a price appreciation, that could be a compounding gain factor versus just chasing price appreciation, which is what you hope for in a tech stock. But if it's, up 50% or up 100%, down 50%, that would drive me crazy as far as heavily positioning on something that you're going to chase. And, chasing a Palantir. I mean, we did this a lot last year. We talked about Palantir a lot. I was just trading good old credit spreads, good old, ratio spreads, good old naked puts. Like, I didn't chase and run other than like the small position I had early in. But I mean, I think stuff like the energy sector could be great. I think that oil's, I heard you say right before I came on that oil, you're looking to go bullish. I mean, I have some trades in that as long as oil future stays above $50, I'll make some good cash by the end of the year.
Yeah.
So
I think oil
I'm pretty bullish on it. Yeah.
I think oil has upside too. I mean, this morning we had good unemployment claims data, and I'm macro heavy, so good unemployment claims data. Unemployment in the U.S. is still very low, 4.3%. You have interest rate cuts coming. You have PMI still looking good. I mean, I have data for this just to give us an overview of why I think oil still has upside. I mean, it is also the AI trade. I think will bring a lot of sectors with it. And just quickly on the utility stuff, I think utilities are gonna trade differently than they have in the past. Where there's this obvious build out for AI. The power needs for AI are super high. I don't think that's going anywhere anytime soon. And so utility companies, which are the power companies, are likely to see some give back on that. I think that PE ratios on I own NextEra Energy, NEE, and I own XEL, which is XL Energy, which couple boring utility stocks are actually doing really well right now. So anyways, just a quick update on the thought process with oil prices. So we had good retail sales numbers, services PMIs. Today's number, when it updates for GDP, was a monster. That's really good for oil, right? If you have growing economies, that's good for oil prices. Oil prices have also been very suppressed here in recent times, so I think that there's potential for a reversal on that side. Inflation is still 2.9%. High inflation is typically better for commodities. So, I think there's a good picture to be painted for oil price upside. Jobs data, not so great. But again, we had good jobless claims. Let's see if the next time around we get a little bit of a bounce back in NFP numbers. That would be good for oil prices. But again, today's data, very strong for the US economy. I'm a buyer of oil. If I can I'll probably get long maybe today. Depends what the setup looks like. But I think commodities in general actually look good. Copper too, oil prices. Like, I think you could see some bounce back in these things. Oil prices, I mean, have been sort of a loser for the last few years. Energy stocks. There was a time where I'd listen to CNBC for a little bit, and all you would hear was everybody touting how, I've got 20% of my portfolio in energy, and now, nobody wants to talk about XLE or Exxon Mobil. All those things are so boring, left for dead. And so, I think there might be some breakouts. I think you might be having some momentum form in oil prices on the demand side, meaning economic data holding up okay.
Yeah, I mean, oil prices going up. It's good as a trade investment. I just think it's bad when it reflects pay at the pump. If all of a sudden people are paying an extra 20, 30, 50 cents a gallon here in the US, then it's higher inflation. Then it's something. The one thing that we notice the quickest would be at the grocery store at the pump. If those are up, it's like that's the stickiest inflation that the Fed's like, we don't include food and energy prices. That's called core inflation, right? But that's what we feel the most as far as like price sensitivity. So oil prices up. I mean, again, there's a careful level, and I think oil is always heavily manipulated with supply and demand between what OPEC says they're going to do, what they do, what they're going to produce and not produce. I think that it's probably safe to keep oil above $50. I think it's probably smart to keep oil below $80. And it can live and exist, and countries can make money, and there's margins there. But if you see above 80, all of a sudden it's too expensive. Below 50, all of a sudden it's like, do we have a war? That's what's very volatile about oil. Is it's a global conflict if it's too high, too low. So I don't trade oil a ton other than having defined risk. But I mean, I know a couple of traders that they're just like everything else is like naked strangles on oil. And like, you're just one bad geopolitical event away from, getting busted up on that trade. So
that's true. That's why the premiums are good, is it can have some wild moves. Yeah. Yep. So I like oil, stocks. I think I think same thing with the dollar. Someone asked about dollar analysis. I think dollar may be in the short run. I've been saying this the last couple of days. I think it is solidly basing out here around 96.50 for now. I don't know about the longer term, but you've had a good little stretch of some of the data bouncing back. We've had just a stretch of like terrible economic data outlook. Things looked really rough for the dollar. Last couple of weeks, you've had some stuff turn around, and the Fed announcement was in some ways taken as sort of a almost like everyone kind of expected Powell to be dovish. And he was sort of like smack dab in the middle, at least in my opinion. It wasn't like overly dovish, wasn't overly hawkish, sort of just smack dab in the middle. So after Fed Day, dollar immediately bottomed out. Somehow I'm just not surprised that it's just so ironic how that tends to happen. Fed cuts rates, projects rate cuts are coming, and the dollar bottoms. So it's just amazing how that so consistently happens. But yeah, dollar looks really strong here. Strong break to the upside here today on higher GDP numbers and lower unemployment claims. I think dollar has room to maybe go back and even test the 100 level if we're really bottoming out.
Yeah, I think that retest of the lows. Timing was, technically it was at the lows. Timing wise, it's FOMC running back to 100, maybe a surprise to 101, 102. I still think the dollar is a good spot to fade it. So between 100 and 102, 103, I'm looking for topping patterns to short the dollar. I think we go back down. I think we do have a reason for the dollar. Zooming out on the dollar index, so DXY, even if it was something along these lines, like a large channel, and just make this a big parallel channel. We could go, I think, up into here, just above like the 100 to 102 handle. And then if we come back down to retest the lows, this could take however long it needs to take to play out. Does the dollar catch a huge bid? Well, if that's the case, we're going to see a much deeper correction in equities. That was the one thing as far as technicals. I thought, well, if we're going to see a technical correction in the stock market, I could see the dollar catching a bid, possibly gold cooling off a little bit, mainly with this dollar jumping. So I think dollar looks good to 100. If you want to short the dollar, I think, looking for patterns at the 100 to 101, 102 zone. But at least right now, it's like this is allowing the markets to roll over a little bit. If we get that 3, 4, 5% correction, watch those 2150 period moving averages, and then we'll see where everything kind of lines up for like a dip. I think that the dip is bought. I hope we don't have just like a 2 to 3% correction that gets bought again, because it's been like also a very long stretch of we've had more time with less than a 2% correction, less than a 2% day correction. I just think that's a lot of it attributed to like zero DT trading right now. The positive gamma flows are so strong every single day. But I did notice that this week. This is just the way I see some charts every single day. If we are in a negative gamma environment, that just kind of perpetuates this like continued cascade lower. So, S&P is opening lower, futures down almost 0.5%. So volatility, we might see the VIX up into the high teens again, Nick. We might even crack 20 on the volatility index. So something to keep an eye out for.
Yeah. And just to wrap up here, Chris, because we got our next show host taking over here in just a second. I think just a summary for people who are maybe just tuning in, or this is at least where I'm at. My perspective on this is that I do think that we are likely to get some pullbacks on things like metals and stocks. I'm not trying to short them or bet against them. I'm actually waiting specifically for pullbacks in those areas. But I think that the catalyst could be what you're talking about, Chris, which is possibly some upside in US dollar yields and oil prices, which typically do spook the risk assets a little bit, right? Those are inflationary outlooks, and oil prices rising, to your point, if they impact the pumps, can be, I think you have a little bit of room for that before it becomes an issue. And so that's where I think oil prices, yields, and dollar have some room to squeeze higher here in the short run. And I also think there's upside potential for the VIX. We've been real quiet on volatility. I think we're starting to see a move here higher today in VIX. And so we'll see if that does persist, up 7% on VIX today. Again, I see plenty of potential upside for VIX in the short run. So
I'll be selling premium, dude.
Yeah, same.
That's it. Get above 20. I'll look at some premium. I'll give myself wide margin for error and throw out a end of year, early January. If we have another corrective window, probably that like January to March, January, April, could be sideways, could be a correction, but I think once the market has enough of a correction, it's ready to start, dumping back into support. I think we'll find it.
Yep. There we go. Well, Chris, thanks very much for joining me on the show here. We're going to go ahead and throw the show over to our next show host. We've got Trader Tom here to take over. Chris, thanks very much, man, for coming on. If anybody would like to check out Chris Pulver's YouTube channel, we'll drop the link to his channel in the chat. Boom, there it is. And also, if you want to get access to the trade alerts being shared by Chris, that is a Pulver Alerts service that we offer at A1 Trading within our Discord. If you'd like some information on that, you can go to our website, a1trading.com, and you can explore the Pulver Alerts there. Maybe we'll drop a link here in the chat as well. If you have any questions, you can also chat with a member of our support team on the website. All right, guys, that's it. Thanks very much, Chris, for being with me here, and we'll see you on the next one.
Thanks.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Yo, traders, how are we? Trader Tom here from Simply Forex. And we are going to start my mini session by looking at the US dollar. So we've just had some excellent GDP and employment figures and durable goods, like nothing but epic news, right, coming out of the US, and it's led to a strong US dollar so far, right? And if we get a daily structure break, like this is Euro US dollar, we can look at other US dollar pairs, but if we get a daily structure break, okay, and the candle today's candle finishes something like this, the body of the candle breaks these lows, I am now bullish US dollar, right? I would look to, for a retrace into a potential resistance level here and then look to take price lower. And I would aim just for the next piece of support. All right. So really interesting right now with the dollar. Are we going to see structure breaks, right? Now, also what I want to show you is the importance of looking at multiple time frames, right? And also, guys, before I show you this, please ask me whatever you like about trading, right? If there's maybe a currency pair you want to look at or some aspect of trading you're not sure about, then please fire a question and I will happily answer it. So yeah, I just want to show you this, guys. So let's go back. Let's use the back to the future button and go back to here, right? Now, if you looked at only the daily chart, right? Let's say you looked at only the daily chart and you were here and you're clearly seeing this uptrend. We've had a retrace into our smart river, right? It's green, we want to buy, and we're in an uptrend and we get a nice big bullish candle like this. Now, if you said to me, Tom, I'm going to wait for a little bit of a pullback and take price back up to these highs, I cannot disagree with you. That looks like a very good idea, right? And that's looking at the daily chart. And for me, day is king. But I have to take a look at the weekly chart. I can't not, right? The weekly chart is going to give me lots of information as well, right? So right now, that's where we are. You're like, Tom, let's buy this trade. Now, if I show you the weekly chart and I just simply asked you, would you want to buy into that weekly candle that is at the last high and is at resistance? And hopefully you would say, no, I don't, right? It's clearly a resistance level. We've clearly had a big wick rejection, right? So that daily, weekly conflict, I just can't trade, right? There is no trade for me. Now we know we've got this big wick rejection. Okay, if we go back to the day chart, right, that would stop me from taking this trade, right? And if we go back to real time now, a good decision, right? I know, obviously some news has helped this. But now I'm very much interested in selling euro US dollar because we've got that big weekly rejection candle, right? And if this candle finishes something like this, we've had a daily structure break, right? And I will be very much interested in selling euro US dollar. So yeah, I just wanted to start by showing you that, guys. Let's have a look at what other questions we've got in here. Okay, so we've got Charvong, beautifully pronounced, I'm sure, wants to look at Aussie dollar, US dollar. So let's do that. Let's have a look at another Aussie dollar, US dollar pair to see if we're seeing this, you know, a structure break on US dollar pairs, right? Now, again, right, let's go back a few days, right? Let's go back here. Okay, let's go back to this one here, guys, right? Now, again, we're in a daily uptrend, right? We've pulled back to a really nice area of support, right? This is this smart river. We've had a nice bullish candle. Again, exactly same as euro US dollar. You would be like, right, Tom, let's buy it back up to this level. I'd be like, that's a good idea. Let me show you the weekly candle. Right? Do you want to buy a candle that looks like that? And the answer is no, right? If anything, I'd be more interested in selling. But in order for me to sell, let's go back to real time now. I need a daily structure break. Now, if we pull this level across, right? Now, Aussie dollar, US dollar is less clear cut, right? The euro US dollar would be a clear structure break. Now, this, I would say, is this enough of a, you know, a higher low? And I would say probably not, right? But on the H4, this will definitely be a structure break, right? So Aussie dollar, US dollar, if we start breaking below this level as well, let's say we end up with a candle like this that's broken, you know, this support level, we are seeing a lot of selling. Yes, the structure of the market is a little bit open to interpretation. It's not as clear as euro US dollar. But again, I think we've got a good trade potentially back down to these last lows in here. And even this 0.6500 psychological level, right? But I won't do anything until I see this daily candle finish. So when I wake up in the morning, have my bran flakes, blueberries, and milk, which I pretty much have every day, I will look at the US dollar pairs then, right? And see if we're still seeing this sustained US dollar strength. So yeah, there you go. That's what we're seeing in US dollar pairs. Okay, so creative murals and portraits. I'm assuming you do murals and portraits. Call me Sherlock Holmes. Hi Tom, how you doing? Thanks for a few tips. Learn a bit while watching over the weekend because you put in a way no one else does. Thank you. I will pay you later. Okay, Swiss franc yen. So we've got Sylvinus wants to look at Swiss franc Japanese yen. All right, let's do it. Let's do that. I've literally just closed a CAD yen buy trade. Right, I was buying this trade today. We had a couple of good trades actually. We had Aussie dollar Swiss franc buy trade, and we had a Canadian dollar yen buy trade. So if you think about that, straight away I am bearish yen, right? Because with Canadian dollar yen, right, really quite simple, right? We're in an uptrend, higher highs, higher lows, big bullish candle. There's a strong probability we can take it back up to these highs, right? It's pretty much what I did. If you look at the H4, it was actually a trade that we took here, right? I actually took this trade yesterday. Okay, we got a break of this last high. We had a pullback, entered in here. 1:1 is most of my trades, guys, right? Just to let you know, we've got 1:1, and we've literally just taken profit today. So That was Canadian dollar yen buy. So I am bearish yen. And Swiss franc yen is no different. I mean, the only thing with Swiss franc yen is this weekly candle. Okay, so let's start there. Let's start on the weekly candle, because let me drag this resistance level across. Now, again, what I show you is factual. It's not me making stuff up, right? I'm just showing you the facts of the market. And the facts of the market are this. We were very overbought. We had a retrace. We was in an uptrend. It wanted to come back up and test these highs, right? But at these highs, this is the weekly chart, we haven't had a break, right? This wick closed back into this wick never broke these levels here. So there is resistance here on Swiss franc yen. So really, for me, I wouldn't be interested in buying into that. As simple as that. Now, the daily paints a slightly different picture because we've actually had a break. But the weekly, I just wouldn't be interested in buying that for those reasons. And it'll be really interesting to see how this candle finishes this week, right? Will we get a wick close back in again? Yeah, and if you keep seeing wicks close back in one another, that's a pretty good indication that sellers are gaining momentum. Okay, so weekly, I'm not interested in buying, although we're in an uptrend. Now, if you go down to the day chart now, you know, it's a very different story, as I said. Okay, we are clearly in an uptrend. This candle, very, very bullish and broke this high, right? If, again, it goes back to what I said at the start, guys. If you were just trading the daily chart, you'd be like, right, let's sell this bad boy. But I don't, right? I try to get as much data as I can to make the most informed decision I can, right? So even though this is super bullish, I'm still not interested in buying it right now. Okay, so I would stay away from this trade. But if you said, Tom, you know, you have to trade this, otherwise we will pull your toenails out, right? Not nice. Not that I've had it done. I'm sure it's not nice. Then I would buy it, right? We're in a daily uptrend, nice, big, strong, bullish candle, right? I would buy it. But yeah, just because of that weekly, I'm not interested. Let's see what the H4 is doing. Okay, so we're seeing a bit of selling pressure on the H4, but again, you know, it's a little bit scruffy here, but we're, you know, clearly in a H4 uptrend, right? That's what we're in. Yeah, but just not interested in buying it. So hope that helps. Okay, so we've got people wanting to look at lots of US dollar pairs. We've got Jacob wants to look at US dollar CAD, LFTJ, US dollar yen. Why? Okay, so there's an interesting question. So Narlod, why do you take 1:1 trades? Because one of my weaknesses as a trader, right, and you must identify your weaknesses, right, in order to create systems to combat your weaknesses. There is no perfect trader, right? Buffett is not perfect, he told me. Right, but yeah, I just wasn't very good at letting 100% of trades run. Now, when I take 1:1, I use, depending on where daily resistance is. So if we go back to my CAD yen trade, right, and if we go to the day chart, now I took 1:1 here, and I closed 100% of my trade because we are at a daily resistance level. Now, let's say my trade started here and finished here, right? And here was my stop loss. If I took profit here, I would let some profit run. I would potentially close, let's say 70% of the trade or 80, and then I'd let some profits run. So one of the reasons why I do it, right? I wasn't very good at letting 100% of the profits run, but I am fine with taking 70% profit and letting 30% run. I can only win at that point, right? And secondly, my trades are not, it's not like I fixate at 1:1. But if you, let's go down to the H4. So let's put this level in here. We know that, which was my target, is daily resistance. That's where the resistance starts, right? Now, I'm an intraday trader, right? So I typically enter on the H4, maybe the H1. And if I said to you at the start of the day, where would you take profit? You would say, I would take profit at these last daily highs. So I let the market dictate my risk to reward, right? Let's say I entered here, right? And my stop loss was here and here was my target. This would still be my target, my take profit. But this time, you know, let's say I get 2.5:1, right? You know, I let the market tell me where to take profit, not what I want. You know, I would love a risk to reward of 1:10, but the market doesn't care, right? So take profit at support and resistance levels, because by definition, resistance is a selling level. So take profit. And if you were selling, right, take some profit, because by definition, a support level is a buying level, right? So yeah, those are the reasons why. Okay, Max, how are you? Is selling Swiss franc, Japanese yen? Yeah, I mean, totally understand it. It's at weekly resistance and we've got bearish candles. Right, US dollar yen and US dollar CAD. Let's start with US dollar yen. Before I even look at US dollar yen, I'm just not interested in it until we break this range, right? So let me show you the range I'm talking about. And maybe today is the day, right? Because we're seeing all of that US dollar strength come into the market, right? But we've just been in this range between here. Let me draw that line again. I apologize. I've been drinking. And here, right? Yen has just been going, right? Okay, a little bit of a little bit of this here. But ultimately, it's just been ranging, right? Now, as I just showed you there, interestingly, this is an uptrend, okay? Because we're getting higher lows, higher highs, right? We're in an uptrend, but I just cannot buy into this resistance. This resistance has held, you know, since here, since the 12th of August. It's good resistance. So again, I'm not interested in buying US dollar yen now, but like with a lot of the US dollar pairs, this could be the break of structure or the break of an important support and resistance level that we've been waiting for to capitalize on US dollar strength. So if I get a bullish candle, like, let me draw that again. Like I say, I don't know what they're putting in my water. When I say they, I mean my carers. So if I get a nice bullish candle like that, right, I'm now interested in US dollar yen. I'm not going to just start buying, but I'm interested. And look at all this free air you have up until this last high over here, right? Lots of free air, and I like free air. Free air, I mean, there's no support and resistance stopping it in here, right? The only piece of next resistance is there, right? Free air. But if I get this candle, I'm still going to wait for a pullback, right? Potentially into this level, or even, you know, our smart river catches up. Somewhere in here, we get a nice bullish candle. Even back at these highs, that's when you've got a nice trade. All right, so for that reason, not interested in US dollar yen until that happens. And obviously, guys, I could be waiting days for that to happen, but, you know, welcome to trading. You know, it's basically less is more. Sit on your hands until they're purple kind of thing. So yeah, there you go. Right, what else did we look at? Yeah, US dollar CAD. So Jacob, this is for you. So everyone's loving a bit of US dollar at the moment. I trade all currency pairs, like all 28 guys, right? I don't discriminate. Okay, so the problem you have here is this. Not problem, it's not a problem, it just means I don't have a trade, right? Because that is clearly resistance, right? Again, I'm not making this up. The market has told you that is a big level. Look at the reaction you got. And now we are at that level. It's the same with pound US dollar at the moment. I want to sell it, but we're at support with pound US dollar. So if ever I'm in this, and to be honest with you, US dollar CAD kind of structure wasn't that clear really. You know, I, at one point was thinking potentially a head and shoulders pattern, right? Shoulder, shoulder, head. If we broke this level, you know, looking for sells, but never broke, right? And instead, we've had nothing but US dollar strength. Now, yesterday, interestingly, this candle is where structure becomes clear because we've broken the last high and therefore we're getting higher highs. That is an uptrend. Okay. But you know, there's just no room. I'm not going to start buying in here. You know, you put in your stop loss here or something, and this is your reward, right? And this is your risk, right? There's no value in the trade, and I just won't buy into that level. So I just know, guys, if the market is in an uptrend, daily uptrend like this, but it's hitting resistance, I pretty much know I won't have a trade for some time. Because sellers will come in at this level, right? So usually you'll get a little bit of, you know, sideways before you get a break or you get a breakdown. So I know I won't have a trade for a while, and it's the same for a downtrend. If the market is in a downtrend, but we're at support, I just know I'm not going to have a trade for a while. Yeah, I sort of discount those pairs and look at other pairs, right? You've got so many assets you can look at. So yeah, there you go. Sylvanus, again, I've probably pronounced your name perfectly, I'm sure. Euro, New Zealand dollar. Right, I've got 2 minutes, so we're going to look at this very quickly. And guys, if you like the way I analyze the markets and how I look at them, and you want to learn technical trading, then please come join the channel, Simply Forex. I'm sure the guys will put a link in the live chat. So this is a question of value, right? Now, you don't need to be Warren Buffett to see that as in an uptrend. Right, we broke these highs here, we're getting higher highs. It's clearly in an uptrend, but I have no interest in buying up here. There's just no value. If I bought up the RSI indicator, that would be around 70, which signifies overbought, right? Or overextended, whatever you want to call it. Okay, so I'm not interested. Now, I would be interested if it pulls back to this level here. Right, we get the river catching up. You know, I'd be interested in buys from this level, but up here, just not interested. There's no value. So yeah, you must trade from an area of value. Think of it like this. Up here, you're buying a house for $1 million, right? You don't want to do that. Yeah, you want to get in here and you want to buy the house for 900K. Right? It's exactly the same with this trade, right? I just want to get in at a better price. I want to buy it more cheaply. So yeah, always trade from an area of value, guys. Right, guys, on that note, I am out of time. So thank you very much for your questions, guys. Appreciate your time. Thanks for having me on, guys, as usual. And I'll see you next week, no doubt.
Hey, stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello, hello. Good afternoon, good morning, wherever you are in the world. I hope you're all well. So we've had some interesting moves in the market. I'm not going to go over all the news we've had. Obviously, I'm sure Nick or someone has already done that with you, but we did have GDP and jobless claims that were supportive for the dollar. So we have seen some counter moves to what we have seen over the past week and a half. Shells, ball out. Jacob, good to see you guys. I hope you're all having a good day. So my positions took a turn. Nothing overly concerning just yet. The Aussie CAD is pretty much back to entry. Euro dollar is now in some drawdown. I got taken out of a trailing, not trailing stop. Got taken out of a scaling with a trailing stop. So there's not much damage done on that one. But I'm still in the initial trade. The Euro Aussie seems to have pulled back slightly. The S&P is rocketing down, so that one's against me. And my Nikkei trade is pretty much in very, very minor profit. So it is what it is. I'm going to let all positions run. I'm not really interested in trying to close out or micromanage them. If they get stopped, they get stopped. Anyway, the dollar. I tuned in when Chris and Nick were talking about the dollar. And to be honest, I kind of completely agree. I wouldn't say that there's really much else to add on. I think if we could get the dollar to around 100-ish, and I think we spoke about this yesterday as well, I think that would be a pretty solid level to go in for some short positions. Now, of course, you need to wait for confirmations and you need to also have a reason. At the moment, there's a couple of pretty solid reasons to be a buyer of the dollar. Obviously, we've had a relatively hawkish meeting or speech from Powell the other day because we had obviously quite a dovish, well, not dovish actually, quite a neutral press conference where he kind of ruled out an aggressive easing cycle. Then he came out earlier this week and said, basically didn't insinuate we're going to have more cuts. So that's one thing. Then we also had, I can't remember what data point it was now. So we had something else come out that was quite good for the dollar. Then we've had jobless claims and GDP today that were quite good. So yeah, the dollar's definitely catching a bid at the minute. Now, whether that will continue, I don't know. We'll have to see. Main watch, I think, in my opinion, is going to be NFP coming up in, what is it, 1 or 2 weeks away. And then obviously inflation prints as well. Now, I don't really have any setups, to be honest. There's nothing that I'm really watching right now that I'm interested in. Aussie, New Zealand, I've been watching this one for a while. I haven't managed to get anything on this whatsoever. The pound dollar trade, again, I was speaking about this one, it might have been earlier last week or early this week, I can't remember. I wanted to be a short seller, and the main reason was to hedge off some of my dollar short risk, but also capitalize on the weaker foundations that the pound is sitting on. Missed that trade as well, so that's been unfortunate. Euro pound, I still quite like the idea of being a buyer, so I'm just waiting for some sort of pullback. It seems we are getting quite a nice rejection at this previous high, just a very simple sort of resistance that we've seen form. New Zealand US dollar as well is taking a hit. All of the dollar crosses are heading to the downside today. Pound Swiss, got absolutely no interest in trading pound Swiss. Pound New Zealand, not really too interested. I'm still in dollar Swiss actually. Very unprofessionally, I completely forgot I had this position open. I'll be looking through the watch list every couple of hours and I'll see, oh, I'm still short. Not really a problem, it's a small position. So I might add into this at some point in the future. Not too sure. I'm going to leave it to run though for now. Dollar yen's obviously had a nice move to the upside. I would love to be a seller of dollar yen if we could get up to sort of 150.7 or 151. I think Tom was talking about this just before I came on. So somewhere within this area would be quite nice to be a seller. Again, as long as the economics are still supportive of that idea of being short dollar, I think it's a very, very reasonable position to look for. Gold and silver have also taken a hit, obviously on the back of the dollar strength that we have seen earlier today. Now, is this enough to be a buyer? In my opinion, not really. I suppose you could potentially look for something a little bit more short term, maybe some sort of rejection off these highs. So you could look for a break and retest, and maybe we could see silver continue higher. For me, that's a little bit too aggressive, especially considering that silver is very high, and I could see a larger pullback coming at some point. So I'd rather just wait and see what we could get on the metals slightly later down the road. Yeah, I know ball out of saw. Slugmeister, hello. So just had New York Open 6 minutes ago. Actually seems like it was relatively flat. We've had a very bearish sort of overnight and pre-market. However, Nasdaq's taken a hit, but the Dow seems quite flat on New York Open, which is interesting. Nasdaq is just getting pummeled. It's been pretty much bearish all week except Monday. So 3 days straight of just selling on Nasdaq, which is would have been nice to be involved with, but unfortunately I wasn't. So Edgefinder, we've got the dollar CAD reading very bullish with a score of 12. Pound New Zealand's got a very bullish score of 11. Aussie New Zealand is 9. I'm still looking at Aussie New Zealand. Pound New Zealand, I wouldn't mind being involved with, especially with the fact that we could see the RBNZ on a more aggressive cutting cycle. But yeah, I don't know. I'm not overly convinced in terms of the price action on Pound New Zealand right now. China 50, I think we looked at China 50 yesterday, but I completely forgot to keep an eye on it. I'm not sure what it's doing right now. It's a tricky one. It's a difficult market to gauge because, first of all, I don't trade it very well. I've never traded actually the China 50, so I don't really know its behavior. But even from just a price action view or general price action rules, if you will, it's an odd market because it doesn't really have much going on. It's sort of, I don't even know how you would explain it, and I don't know if this is just a me thing, but the price action just gives me a weird feeling. I'm not sure I like it. I'm sure AUD USD 0.65973. You think this move down is short term? I think we've seen, in my opinion, I think we've seen the majority of the upside for today. I could be completely wrong. I think we will see continued upside on the dollar, but today I think we might have slowed down. I think we've had the news, we've had New York Open. I think it's now just going to be sort of either very slowly edging up or pretty stagnant where it is. And then yes, I would say until we get something else to pressure the dollar, we're likely to see it head up towards sort of 99 to 100, I would say. Cedric, hello. Just joined. Let's read some note or comments. We don't really get that here, Cedric, to be honest. I think the comments on this channel are normally pretty sensible and reasonable. Although I saw some people asking Tom about his one-to-one R&R. I'm not sure if he does trade one-to-ones, to be honest, but to be honest, the one-to-ones actually can be extremely profitable, obviously depending on the win rate. So I see it quite often on social media. People will criticize R&R on a trade and they'll never see the win rate of that person. And obviously it goes hand in hand. You know, it's mutually exclusive, kind of. I think that's the right word. But yeah, I think one-to-ones are completely fine, as long as, again, the win rate makes up for the missed potential. So the Dow, let's see, is it? Oh, there we go. Now the Dow is kicking off. I would love to sell this market, to be honest, but I'm not going to, just because I'm on stream. I don't want to enforce bad habits, but being a seller of the Dow here with a stop loss just above these wicks, small position size, and just seeing if we can continue momentum to the downside seems quite appetizing. Not going to, again. I'm still relatively bullish on the indices. I find it very difficult to ever be really bearish. So if we can come down to around, let's say 45,800, I might attempt to buy a long position. The issue is I'm already long on the S&P and I'm already long on the Nikkei. So that would expose me quite heavily to the stock market, which I'm not really a fan of. But I will maybe attempt a small position there if we can come down to that area. Would you short euro after a bit of retracement from GDP news? Depends what euro pair. So I think euro dollar could be a good one to go short. When we see the dollar strengthen, we often see the euro weaken, and it's vice versa. They're pretty much inverse. So when we see, like I said, when we see the dollar strengthening, like what we're seeing today, we often see capital flows leaving the euro and going to the dollar, and then vice versa. Obviously, when the dollar's weakening, we see capital flows out of the dollar into the euro. If you put the indexes side by side or overlapped, you will see they are basically opposite, which is quite nice. So yeah, euro dollar short could be an idea. What else could there be? I'm just thinking, what is really the next best currency to short the euro against? I don't really have one, to be honest. Maybe Euro Aussie. I know I'm long, but there is absolutely a case to be a seller of Euro Aussie, I think. But yeah, I don't know. Again, as I said at the start, I'm relatively flat in terms of what I'm actually watching to get into now. I'm more focused on managing the positions that I've got open. Dollar yen's bullish. It seems the dollar might have had a flip here. So dollar yen, dollar CAD. I think we looked at dollar CAD yesterday. I didn't mind the look of it. The price action was a little bit too high. Yeah. So it's, yeah, a bit too extended for me to be a buyer here. So I would need to see some sort of retracement. Let's say the fib somewhere here. A pullback to the 0.618 would be completely fine. A 50% retracement, either one would be great. Just something to let me into the market, because I've completely missed this move and it's too late to be a buyer now. The move's already gone, or the move's already happened. In terms of targets for dollar CAD though, where could we get to? Potentially just this first high. So that would be 1.3987, I think would be a good idea. So I'm going to keep an eye on that one. I'm still in favor of the CAD going lower in terms of value. I think the Canada is in a very tricky spot. It's, yeah, their economy's really not good right now. Anyway, we're not going to go into that today. CAD Swiss could be a nice one to be short. Actually, I quite like this. So with CAD Swiss, we could essentially just be sellers of the CAD. Although I'm not really in love with the Swiss right now in terms of its fundamentals, it's still quite a stable currency. So I think if we could get into CAD Swiss shorts, it would be quite nice to potentially hold into the lows from the 1st of January 2015. So that would also be quite a nice round number just above at 0.550. So I'm going to leave that on the watch list as well for potential short position. Where would your area of interest be in Aussie US dollar, do you think? Let's have a look. Well, this was my area of interest, and it's just being absolutely obliterated. 0.65, let's see, where is that? Yes, I think you're pretty much spot on there, actually. That seems like the next reasonable level that we could get. It's been respected previously with lows here, and then it kind of turned resistance and it turned support again. So yeah, that seems like a pretty sensible level to look for if you do want to be a buyer. However, I would just be very, very careful. I don't really trust this. I think the dollar might have slightly higher to go. So I would avoid, if you're not already in long positions on dollar crosses, I would avoid it for now. Slugmeister took CAD Swiss shorts at 0.5777. Very nice. 65 is where your daily EMA is. Okay, Chris, that makes sense. Leon, hello. Yeah, Chris, that's it. Yeah, it would have been catching a falling knife buying there. So I'm just thinking, there's not really that much of a change. Oil's getting a bullish reading, which is interesting. Let's have a look. So oil could be actually quite a good play. I'm going to keep an eye on oil as well. So we do have the edge finder giving it a reading of 7, which is good. So obviously we want to be buyers of oil based on that. We are seeing quite a nice pullback here on the H1 and the H4. So we could be looking for this minor level of resistance support, whatever you want to call this type of level here, to be a buyer. So that would then bring price into the 50 and the 200 moving average. We've already had the EMA cross, basically indicating that the trend is now bullish. So let's see. So it's currently at the 50% retracement from the most recent low. If we took it from the swing low, maybe. We'll see. So oil could be a nice long position. I need to nail down more of a technical idea on that one though. What else is there? Dollar yen. I'd rather not get involved with dollar yen just yet. I'd either need to see a little bit more from the dollar in terms of bullish data, or I would need to see a little bit more in terms of bearish. I just need to wait for the dollar, really. I'm not in a position to be trading it right now. Gold's still bullish. It's not a huge surprise, but I think gold is too high to buy for me. New Zealand US dollar is bearish as well, but again, it's already flown to the downside. So unfortunately, that trade's already gone without me. But yeah, that leaves me with very, very little to do for the rest of the week. David, hello. Just realized I'm like halfway off the camera. My bad. There we go. Shuffle over a little bit. So I would assume, yeah, it's gonna not be an ideal day for my trades here. So Aussie CAD, I might have to close as a break even, to be honest. Euro dollar, I think, is very likely to hit my stop. Euro Aussie is completely fine. I'm going to leave the S&P because I'm quite happy to just let this one run. And the Nikkei might close out the scale in and leave the initial position to run a bit longer, and then just monitor. I can always get back in if I see it continue higher, but I think I need to really just watch the risk that I'm leaving on the table for now. AI story, hello. He took longs in Aussie US dollar. Yeah, I'm not surprised it didn't work out. Euro CAD. So I'm still quite happy to look for buys on Euro CAD. Let's get rid of these lines. So yeah, I'm still quite happy to look for buys. Although the dollar is strengthening and that is a pressure on the euro, I still think the Canadian dollar is under more pressure. I think that it's in a very, very difficult period. So I would be quite happy to be a buyer of EuroCAD on the next pullback. So if we can get prices come down a little bit lower, let's say towards 1.62, that would be quite nice. But with the volatility or the momentum we're seeing today, I'd be more than happy to just have a very tight stop, something like this, and that way if it's stopped out, at least it will be quick and then I'm out of the trade, rather than having to sit through a longer trade that's just sitting through drawdown. It's looking like they took EuroCAD as well and stopped out again. Unfortunate. Looks like a few people have been caught in that euro dollar move. It's okay. It seems we've all been caught in the same thing. We can all be sad together. Pretty niche one, but Aussie New Zealand dollar bullish on the edge finder, but is in weekly overall RSI. Yeah, so Aussie New Zealand fundamentally is very strong. It's a very good trade, but the big issue with the Aussie New Zealand is this range that it just sits in, and it's been in this trade for years. It's been basically 2014 it's not been out of this range since 2014. Now that makes me very worried because it's obviously a very mean reverting pair, because the New Zealand and the Australian dollar, or the Australian economy, are very related. Same thing that we see with the euro pound pair. So yes, fundamentally, I would quite like to be a buyer. Technically, it concerns me that the upside could be very limited. Obviously, it's a weekly time frame, so yes, you could catch intraday positions. But for me, as a swing trader, there's no room here for me to be a buyer. So really, I would need to actually probably fade this move in a DCA style, and then look for price to possibly, let me drag this over here, possibly come down back into the lows and just continue this range that it's been in for the past over a decade. So that's the thought process I've got with Aussie New Zealand. If we have a pullback to, let's say, the 50 moving average or a 200 moving average, yes, I would attempt to be a buyer. But again, the targets are limited. I'm surprised that Swiss performed better than Aussie dollar and euro against CAD. Yeah, I mean, this is the thing. This is why I quite like the Swiss, because if we look at the heat map, when it loads here, it's actually gone up. It was even worse than this. I think it was like a 15, 20. It was quite a weak score. Although it's still very weak at 33%. It's holding its ground. It's doing very well. Because it's a stable currency. It's the Swiss, in the Swiss we trust. Swiss is surprising everyone. Yeah. I just need to check the schedule. Just bear with me for a second. Okay, so I'm on for basically another 7 minutes, and then there is Miko coming up. It's okay, cool. So is there anything you want to go over in the last 7 minutes of my segment? Because as I said, I really don't have anything going on my trading side. It's just a case of me waiting and watching and slight management. I think I can hold through drawdown like a real man now. Sometimes it's best to not sit through drawdown. Another thing with trading, sometimes you've got to sit through it. Sometimes you need to get out of it. And deciding when that time should be is quite difficult at some points. So like now, my euro dollar trade is a good example. This one, I'm just going to let it hit stops. Although I am 99% certain it's going to hit stop, and I could cut the trade now, I'm not really interested because it's almost at full loss anyway. I may as well just let it run. For me, this difference doesn't do anything for me. I don't really care. Whereas something like the S&P, I will close this quite quickly if we continue to see bearish momentum, because the dollar's strengthening. There's a lot of different reasons that this trade could, this market could end up plummeting significantly lower. And obviously the loss at the moment is manageable. It's not a concern, so I'm happy to close that. Does that I'm not sure if that made sense, but hopefully it did. Anyway. What is best to do now with Dow? Let's see. It's a good thing I didn't sell it. To be honest, I would actually, hold on. I'm gonna look to be a seller. So after the stream, I'm going to mark up my session range, and I'm going to wait for a bearish break, and I will be a seller of the Dow at some point today, ideally. Same thing with the Nasdaq. So That's my plan. But you know, whatever you do is your choice. But yeah, I think being a seller is definitely the best option right now. Just follow, especially for intraday plays, or sorry, day trades and scalps. Just follow the movement, follow the flow. Put all your money into Swiss, gold, real estate assets, no liquidity. Yeah, that sounds like a great plan. And then when the IRS come knocking, they'll take your house instead of your money. Ball out, still talking about nat gas. Yeah, I like the technical idea, but I'm just not ready yet. Closer to the end of the year, yes, I'll probably get in. Yeah, I might miss it, but yeah, it's just the way it goes sometimes, unfortunately. A dry spell? No, I've not had a dry spell, actually. I've been very, very active. I've had, hold on. I've probably had about 7 trades in the past week and a half, and then obviously as well as the ones I've got open. I've had a really, really good run, actually. So that's probably one reason I'm not really that bothered about the trades I've got open, in terms of obviously that, you know, I'm happy to let them run a little bit longer and just see how they play out. Because I do have that slight margin for a loss here or there. That drawdown just happened to me, euro dollar. Oh man, this is why, you see, this is why euro dollar fell. It's because we're all sat in it, and the market makers and the brokers all sat down together and like, look, we've got 500,000 clients currently euro dollar longs. If we just stop them all out, we can make some money. You see, this is the problem. You guys ruined this for me, so thanks a lot. I hope you're happy, because you spoiled the fun. Anyway, that was obviously a joke for anyone that might take that seriously. So yeah, I mean, I would pretty much just be looking for dollar longs short term. Long term, I'm still quite bearish on the dollar. So I think well, if we can get something on euro dollar, some sort of pullback, I would be quite happy to be a seller until the dollar gets to around 99.5. At that point, I might start flattening positions and reassessing to possibly be a seller of the dollar again. But yeah, we've just been absolutely wiped out today. The other thing is just this trend line. Again, we discussed this yesterday, and it's just been perfect. This is like the perfect example of a trend line. We've failed twice to break below here. We failed twice here as well. And here we also had pretty much two attempts as well. So it's just, again, purely on a technical basis, it's giving a very, very good sign that it wants to reverse. I'm not saying it will. I'm just saying, again, from the technicals, it looks like that's what it wants to do. So it makes me consider being a buyer of the dollar and just holding on for dear life and seeing if I can catch a dollar rally from 98 all the way to 120 or something. It might be worth considering. Shaw says a liquidity grab. Yeah, that's right. This is a global financial market liquidity grab. Thoughts on gold? I'm still happy to be a buyer of gold, but not right now. If we could see a larger pullback on the H4, yes, probably maybe towards 3,600, I would attempt to be a buyer, but small position size. And of course, I'd need to assess what's going on with the dollar at that time. James Jackson, good morning to you too. I'm actually about to head off in about a minute. I listened for once to stay out of the news, and I missed out on dollar Swiss break and move higher. I've been waiting for all week, sad life. That's the way it goes, Chris, unfortunately. Somebody sold gold and lost 100K. Yeah, I think there's been a lot of money lost on gold shorts over the past couple of years. Have you tried the infamous strategy of Ivan? No. What's that? All right, Jamal. caught short in NQ. Amazing. Sounds like some money made. I managed to catch a few positions this morning. Barely came out with a profit. So I was long on the DAX here, and then I was stopped out at the bottom of this candle on a trailing stop, so it wasn't too much damage done. Then pivoted to short and then ended up closing here. Missed a big chunk of the move, but I still made some money. And then caught a move on the FTSE as well, being a buyer. So that was quite nice. But yeah, so we'll see I'll see if I can catch some sort of downside into the rest of the day on the US markets. Anyway, ladies and gentlemen, I am going to leave you to it, and I'm going to put you in the very capable hands of Miko. Guys, have a good one. Enjoy the rest of your days. I will see you tomorrow. Stay safe. Don't get margin called, and please don't go full margin on the dollar today. See ya.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat, as well as in the description of this live stream. Check out Vantage. Now back to the show.
Okay, what's up, people? Hope everyone is doing well. Glad to be back. As always, if you do have any requests, any markets you want me to take a look at, any trades you want to share, do stick it in the chat and we can take a look and deep dive into it. I was busy with gold this morning. Unfortunately, still walked away for a small loss on this position, even though it's pretty much playing out as I wanted it to. But I did close the trade early because, of course, we had some news in the afternoon. And I've only just started trading on the 50-minute time frame again. Normally, I'm on the 4-hour chart looking at swing trades that can last maybe 1 to 2 weeks on average. Sometimes potentially longer, but recently I'm starting to trade a bit more intraday. And I did find a nice gold position, which I was quite cautious of in the beginning because gold has just been so bullish. So I did reduce my risk getting into this position because of the nature of gold recently. But yeah, it's actually playing out pretty well. But yeah, I did actually close the trade around here because of the news coming out. I didn't want to hold gold directly into the news, especially if I'm just getting to grips with the 50-minute chart as well. But playing out pretty well. It looks like we are seeing some strength on the USD, so that is definitely helping out the position. And looking at the dollar and the strength we're seeing, I do think this does make me a dollar bull, at least probably for the next few days. I'm not bullish as in long term. I'm still looking at the bigger trajectory of the market. I'm still seeing very substantial lower highs, and price doesn't necessarily have to go and take them out for me to completely disregard my bearish bias, but I'm not looking for any prolonged move to the upside for USD. I know we're kind of respecting lows here, and this could end up being a bit of a bottom for the dollar potentially, but equally I'm still seeing lower swing highs. I'm still seeing just about lower lows as well. And yes, we're looking very strong this afternoon or morning, depends where you're watching from. Yeah, I can't be quite confident to necessarily say, okay, USD buys are in play and we're going to see a reversal. So I do think we can see a bit more upside, potentially to resistance there on the left, which could be a nice intraday position, maybe Friday if we get a decent pullback, or probably early next week in this situation. But yeah, momentum has definitely picked up, and of course we are seeing a very, very bullish candle in front of us right now, and that's about to close in an hour's time. So I'll wait for that candle to close just to really see how momentum is shaping up. But as I said, not looking for anything particularly crazy. I'm seeing a lot of resistance, a lot of rejection around 98.6. That's where I would be comfortable betting on a move there for the dollar. Above that, 99 potentially might hit, but I could see some sellers entering the market, and we'll see how we react again. I'm trying to react to what price is giving me. Maybe we don't form a lower high. Maybe price does break structure. I'll reinvestigate that as we go along. But yeah, definitely a lot of momentum at the moment. Really strong candle. So I would suggest going into Friday. Let's say that 4-hour candle does close as it is looking now in an hour's time. Let's say if we do get that close, then tomorrow what I'll be looking for is pullbacks on the dollar. This zone looks really, really good. Really nice consolidation. Of course, really aggressive momentum to the upside. Now, it does beg the question, will price even have enough juice to even pull back here? Maybe, maybe not. If it does, that would be great. Maybe we have to reanalyze that come next week. We might create new structure, which we can take a look at. But on paper right now, I do really like this zone at 97.9. And around 98.6, 98.5 is where I do see the dollar heading towards. Again, just focusing on a bit more of the intraday look. Longer term, it's still up in the air. And as we start to attack resistance on our left there, it gets a bit more sketchy. But momentum's definitely here. We're starting to print some bullish structure now. Low, high, low, high. Looking for the next low, basically, and more upside. And for euro dollar, its partner in crime is, of course, doing the opposite. Again, I'm not quite there with euro dollar as well for like a big turnaround. This is still our major swing low, which gave us this high. I'm very much focused on market structure, which allows me to kind of map out structure with a bit more confidence and takes out a bit of the guesswork. But when we do have that swing low still in play, yes, we're seeing a lot of bearish momentum right now, but in the bigger picture, that bearish leg doesn't have much significance in terms of, let's say, okay, euro's going to reverse now. Yes, we might see some more downside. It may last a few days, but very much we could still find support, and euro could still go and attack the highs. Dollar could still fall over it as well. So yes, a lot of momentum at the moment. I do think we'll probably see a continuation of that, especially with how we're trading. It's really aggressive. It's not like slow and corrective. We are definitely seeing some aggressive momentum at the moment. And similar to the dollar, I would like a pullback into this area. And I do think we can find some shorts, maybe back into this low. I think that's pretty a safe bet there. So I'm switching my bias around. Coming into the week, I mean, not necessarily switching. Coming into the week, I was a bit more neutral. Last week, I was a bit more bearish on the DXY. But coming into this week, especially Monday, Tuesday, neutral. Now Thursday, Friday, bullish. Completely transition. But yeah, I will take a look at some of the markets you guys are requesting. My focus is very much with USD at the moment. Maybe a bit of yen if yen can start moving. I will go through pound dollar as well. What's up, Doctor? Price moving towards, yeah. Unfortunately not in the trade though, because I did exit before the news, unfortunately. And normally when I'm trading the 4-hour chart, I wouldn't exit a trade because of news, and that's mainly because I've got a big enough stop loss, so I wouldn't worry too much about it. Of course, news can still bite me. It's not like I'm immune to news on the 4-hour time frame. News can still bite me 100%, but I've got a larger stop loss, and relatively my lot size is smaller. For example, if I'm risking 1% on an account, but my stop loss is 10 pips versus 100 pips, well, of course, when I'm trading for 100 pip stop loss, my lot size is going to be 10 times smaller. Of course, it depends on the market I'm trading, but it's going to be a lot smaller. So slippage, the effects of that is going to be smaller as well. It's just less risk involved when you're trading on the higher time frames with major news events. Of course, as you scale down, the more risk you take on, really, especially if you're going to trade through the news. And that's the case I found myself with gold, so I did decide to close the trade. Again, the analysis was basically just looking for a bit of a retracement on gold. I'm still very, very bullish on the market, but I do think maybe we're a bit overextended. We're very consistent with the lower highs. If I just drop to the 15 again, very consistent with the lower highs. So all I was looking to do is see if I can catch the next one and then maybe take it back into the prior low. And this would have been my initial target, maybe to go break even if I was still in the position. But yeah, really nice move. Momentum's picking up. It looks like USD strength is really helping that position out, and we'll see what we can get next. Am I still gonna be bearish on gold going into tomorrow? Yeah, I do think we can see a bit more downside. Gold might come back to retest the high here around 3,700. That'll probably be the next big psychological level for gold, so I can see price being attracted to that area. Again, in terms of the bigger move, nothing's really changed. We're seeing a couple of bearish candles on the daily chart. Does that necessarily mean that gold's about to drop? It could be the start, but we don't have enough information to validate that. I would just treat this as another pullback for gold, and probably there'll be some nice bullish opportunities later next week sometime. We'll see how price reacts with this area. If we violate that, then I'll probably start to throw some question marks. Maybe gold is going to have a bigger counter trend move. but it very much could just be a retest and we continue. So still very bullish on gold, but we are seeing some nice intraday shorts, and I do think there is still a bit more downside for that as well. In terms of pound USD, yeah, very nice move this week. I was actually shorting dollar CAD at the start of the week, and I decided not to short pound USD because the bias of both of those markets contradict. If I'm shorting pound USD, it does really make sense to short dollar CAD and vice versa, because one relies on dollar being strong and the other relies on dollar being weak. So I did choose dollar CAD instead. Of course, in hindsight, wrong trade to take. Pound USD would have been a lovely short to have, but I was focused on dollar CAD. It looked good in terms of my technicals, so I did take the position. Unfortunately, it was a losing position on that one. But yeah, pound USD, really nice move. Looks like we're coming back into support. What we had last week was a really aggressive fake of that resistance. Price was respecting this level very, very well prior to the breakout. However, we didn't have enough momentum to keep going. Price came back down after the Fed interest rate and had a very, very aggressive close back below that level. So the plan this week for pound was to see if we come back into support, and looks like we've just gone and done that. So pound USD, what's my take next? Well, now that we're hitting support of this range, you can kind of view these two moves as fake outs of that level. If you kind of disregard that price action, price pretty much hasn't left this area for quite a while. Since mid-July, we've just been back and forth between those two levels, of course, minus the fake outs. So the way I see it, pound USD is back at support. I don't now want to be looking to sell pound USD anymore. If I was looking to sell pound USD, it had to be early in the week where I can find a pullback somewhere, or even a retest of this area again, which of course we didn't get. But now that we're hit support, if anything, the buys make the most sense. Now, because of what's happening with USD, do I want to be a buyer of pound USD and go against all that momentum? No, not really. I do think we might get a bounce, but I wouldn't be looking for any big positions. US dollar's not really in our favor right now. And to be honest, I wouldn't be surprised if we see a breakout, especially with how strong the USD is right now. And of course, if we do get a breakout, I would wait for a strong daily close. I wouldn't scale down and look for some smaller, intricate breakout. Wait for a strong daily close, like we did over there. Wait for a strong daily close, and then I'll look for a push into this level, which is 1.32. So I would be pretty bearish on pound if we do break below 1.337. And of course, besides that, we might bounce, we might see some upside. I'm not so interested in that move. I think maybe if you scale right down, you might find some nice scalps off that low. But yeah, if we do see a breakout, a strong close below support, I do see pound USD rolling over back to 1.32 roughly. And of course, if that was to happen, I do think there'd be really nice pullbacks along the way to ride that back to lows, and those would be the intraday opportunities I'll be interested in, or even a break and retest of this area. That would be nice as well. Get a stop loss above that level, and then look to try and target the lows there. So I do think pound USD is at a bit of a crossroad right now. Are we going to break this? Again, I'll wait for the daily time frame to tell me if that's going to be the case or not. USD CAD is another one which is testing major resistance as well. Or is it breaking through? No, it's just arrived. So again, dollar CAD testing major resistance. Do we break through this? Do we reject it? We still do have structure to our left here. This is our last major swing high, which gave us this low. If dollar CAD does see a major breakout and takes out this high, I probably will look at reverse my bias altogether for dollar CAD. Look at sustained uptrend here. So we definitely are at interesting areas for a few of these USD pairs, pound USD in particular. Euro is not really coming to a significant area, at least compared to like pound, dollar CAD. But I do like the shorts for now on Euro. I do think we can go a little bit further as well. Okay, we'll take a look at oil and pound NZD as well. Yeah, pound USD didn't retrace and fell straight down. That's going to be the case sometimes. Sometimes you get lovely pullbacks and you get opportunities to trade them. Other times you don't get those pullbacks and you don't get those opportunities to trade them, unfortunately. And the worst thing to do is jump into a position and just chase it because you haven't got a pullback. Because then where you enter is probably not optimal. You probably don't have a smart place for a stop loss. You've probably done it emotionally as well. It's just not good to be in mental states where we can be all over the place as well. So really just kind of want to be in the mentality of, okay, if it does pull back enough to give me an entry, I'm there. If it doesn't, it doesn't. Again, the market is pretty much infinite. There's so many opportunities, lower time frames, higher time frames. You'll be able to find something. And again, you're going to miss trades regardless of what time frames you choose. It's just making sure whatever trade you do take is good. So when you look back over your trades, you're like, okay, yeah, good trade, good trade, good trade. Rather than, okay, I chased that, I chased that, I chased that. Because there's always going to be another trade around the corner. Anywho, we got oil to look at next. So oil is still very flat. Looks like it's rejecting highs pretty well. I do like oil if we can finally break out of this range. I do think there's a lot of opportunity for oil once we do commit above 65 or below 61. I would say if oil can pick a direction beyond those two levels, I do like the opportunity because I would expect oil to start trending again. And I do have pretty clear targets of where I expect price to end up. So either back at this low if we do see a significant break of support, or if we do see a significant break of resistance, then I'm looking for a push back to the high there at 70. Yeah, more or less 70. So that's really my plan if we break out. Of course, we haven't done that yet. We're still within the range. So as a result, I do think there will be some short-term plays, selling at highs, buying at lows. You can see how consistent price has been at support. If we were to return there, reject well, you're buying from a very sensible place. And likewise with resistance as well, but not as much. You can see how many times price has really respected that area. So I would suggest if you're looking to trade oil, focus at the highs and lows, or if you're waiting for trending opportunities, wait for the breakout because we're definitely not trending at the moment here. This is fluctuation. This is price kind of building up, getting ready for the next move, which is not quite clear which direction it will be in yet. I do have a feeling it will be to the downside. That's kind of what I'm expecting to happen for oil. But again, I'll wait for price to give me the confirmation. There's no benefit to me having that expectation because there's no tradable opportunity for it. I'd rather just wait for price to break to the downside. Okay, we've got the breakout. Let's start trading. Or of course, if I'm wrong and price does break to the upside, then yeah, I'll flip the bias and no hard feelings. I'll be looking for some longs there to see if we can take it back to resistance. So oil, not much to say apart from really just waiting for the breakout. And I do think beyond that, we'll find some really nice opportunities. Pound NZD is looking pretty bullish. We had a lovely retest of this area. Was that last week? I believe so. Possibly price is having a run back to highs now. Potentially 2.33526 is where I've got the high at. That could be where price is headed towards because, of course, if you look at the bigger picture, pound NZD has been in a relentless uptrend. Higher highs, higher lows, hasn't really showed, well, it has showed some signs of slowing down, but it hasn't broken any key structure, which is the key point. Now we've just had a lovely break and retest. Momentum's picked up again. Yes, we are approaching some resistance now, so I wouldn't advise buying now, but I do think this trend is still just healthy and will likely push back to highs at this point. So I would suggest if you can find some pullback opportunities, it would make sense to get into some longs. Either price may pull back down and retest this area, which I believe would be the best opportunity, because if you can position yourself long here, what you're saying is as long as price respects support, I'm expecting the trend to continue, possibly back to resistance, possibly back to highs, and you can really maximize your risk reward upon that. Or of course you can have other targets as well. Looking to buy potentially on a breakout or a retest of that does put you a little bit more exposed because you're at the highs here. Pound NZD is not the cleanest pair, and sometimes we can see a bit of zigzaggy price, not necessarily manipulation, but your price will kind of dance around sometimes at highs, so it can be a little bit of an awkward place to get involved. I don't really like buying at highs or selling at lows. I always like waiting for dips. So if I was looking to trade pound NZD, it would be a bigger move back to the low there where I would try to position myself, especially from a swing perspective as well. Intraday, I wouldn't mind if I'm just in and out for a quick position. I wouldn't be looking for like a swing back to highs. But yeah, we are approaching resistance now, so I would wait for us to see momentum above resistance, and then we can speak about some pullbacks, or of course, wait for the bigger sell. But momentum is starting to pick up now, but we're trading to resistance, so I don't see much of an opportunity. And I wouldn't look to sell either. I know we're back at resistance. We might have a reaction off the high, but I don't see that as a viable opportunity because there's so many factors or confluences pointing to the upside right now for pound NZD, the higher time frames, the trend, momentum's picked up again, the successful break and retest of that level, that all kind of points in the bullish direction, not bearish. Yes, we might have a reaction, but I think the probability is more so with the buyers, so I'd rather position myself there. I've also been keeping a close eye on the yen pairs, and I'll probably say my favorite yen pair at the moment is dollar yen, and probably or mostly down to the strength we're seeing on USD is a big reason why, because it looks like we have finally got the breakout of this range, which now I'm interested in. And then I'm looking at push back to the high at 150.809 roughly. The breakout is still relatively fresh, so I'm not entirely convinced just yet, but I'm going to be keeping a close eye. And yeah, if price does close back below, then I will step away because at that point, again, it's another fake out. But if this is the actual breakout and price is ready to make its move, then I'm expecting a push back to the high there for dollar yen at the 150 area. And if I zoom out, you can see there is a very slight uptrend on the cards for dollar yen. Very, very slight uptrend. So we do have that kind of natural inclination to dollar yen. So we're buying with that momentum, buying with that higher time frame direction in our favor. And you can see a really aggressive wick to the downside. Looks like that wick did its job in terms of maybe trapping traders on the wrong side. And now we're seeing momentum kick in and we're seeing that strength. So if you can get the successful break of that resistance, well, that simply becomes the next target. And especially intraday, I think there's some opportunities here. Maybe even a break and retest of this level. I mean, I would say just as long as we don't break back inside, I'll be bullish with dollar yen. If I drop to the 15, yeah, 15 is still too early to really say too much about this. We've just had the breakout. Need price to push a little bit more, have some type of pullback, and then I'll start being a bit more invested in the price action. But I can definitely see myself trading this one. Maybe not tomorrow because I think we still need a bit of time to develop. But maybe early Monday, Tuesday, I can see myself trading dollar yen longs back to 150.5, 150.8. Maybe I won't hold the position all the way there, especially if I do intraday. But I'll see if I can take advantage of a decent chunk of that move. So I'm liking what I'm seeing with dollar yen. It looks like the yen basket is poking its head to the downside. So potentially we could be looking at a breakout here. Again, I keep a close eye on the yen basket because it allows me to see like an average of what the yen is doing against the major currency, against the other major currencies. So like dollar, pound, euro, Aussie. We can see what price is doing against that, what yen is doing against that. And of course, we have been in a very bearish trend at the moment. So it looks to me that price is likely to head lower. And if we can break through that support, I think that will be the case. So it looks like we're testing our luck, seeing if price can make that move. And if we can do, well, this is where I do think dollar yen will make a move to 61.08, 6100 basically. So that's the move I'm looking for on dollar, on the yen. So of course, if the yen was to make that move, that means you would expect dollar yen to make the opposite. So there's a nice synchronicity between them, nice correlation. I just need to see that catalyst happen in terms of the breakout, and then I can be very, very confident on the buys on dollar yen. And of course, other yen pairs will come into play. Pound yen was a yen pair I was very interested in at the start of the week, and I still am pretty interested in. I do think the market is just forming some type of high low here to go back and attack the highs again. It's just been super corrective and super range bound, so I have found it difficult to try and find some good opportunities to buy it. It just hasn't really been playing ball. You can see how corrective price is there. So because of that, I've stayed away, but the direction I'm looking to trade in is still to the upside, still a push back to 201. I was actually bearish coming into the week because we just had that break of structure. I was looking to see if we can get more downside. We tried with this candle here. It failed at the low, and then prices reversed. So now I've reversed with it. So I'm looking to see if I can find some pullbacks and trade it back to highs at 201.128. But it doesn't come close to the dollar yen position. Dollar yen looks so much better, and I'll focus my efforts more there. Other yen pairs like Euro yen, Swiss yen, they're a little bit too high up for me to consider buying. Euro yen, as we can see, it's a bit too bullish. Again, you probably might find some nice short-term opportunities intraday, trying to catch some of these lows here. I'm looking for slightly bigger swings than that, so it's not really interesting me. And like I said, it's just a bit too high. We've got major resistance just beyond our heads there, so I could see price potentially even hitting that tomorrow. So because of that, I'm kind of backing away from Euro yen because we've already had a big move. Price is a bit overextended. We're looking a little bit flat now, and we're just being a little bit too bullish. I like price when, yes, it's bullish, but we've had a bit of a dip. Things are relaxed, and now potentially might be on our next wave. So not quite doing it for me with Euro yen, and Swiss is in a similar position, especially because this one's at all-time highs currently as well. So because of that, I'm again still a little bit reluctant to buy it. Not that price can't go much higher, it very much can, but still I'd rather buy dollar yen, which has like a tradable range for me to work to, rather than one that's already kind of done all its bullish move at all-time highs. Of course, could still go further, but I'd rather bet on dollar yen, which hasn't really seen that strength, versus the one that has already seen that strength. So that's where I'd rather position myself. And yeah, I do think with Swiss yen being very, very clean uptrend, not really showing any signs of slowing down necessarily. So this one still may see another bullish leg, but again, I'd rather trade dollar yen. In terms of CAD yen is one I'll keep an eye on. I think this is a bit more for next week, maybe even the week after next as well. It's in a similar situation as with dollar yen, just kind of lagging behind a little bit. So you can see another yen pair which is ranging, hasn't really progressed much. And I'm basically waiting for price to clear 107.769 so I can trade that range between this level to the high. And if you have a quick look at dollar yen, it's basically the same opportunity, except dollar yen has already made the breakout. Consolidation, looking for a push back into the high. We've got the breakout, so now I've got permission to look for pullbacks. Whereas CAD yen was still trading within the range, so it's kind of lagging behind. But once we do get a move like this, similar to what we're seeing in dollar yen at the moment, then I can look for some pullbacks here and trade this range from here to there, as long as price doesn't come back down. But it's the same situation, very slight uptrend at play as well for CAD yen. I do think we can see a push back into resistance. So CAD yen could be something I do focus on maybe in a week's time, maybe towards the end of next week, because we need to get there first and get the breakout. I think CAD's been a little bit weak at the moment as well, so that's probably why it's lagging a lot more behind. So yeah, I can see some opportunities on CAD yen weeks from now. Dollar yen's more now opportunities. So in terms of my focus, it'll probably be mostly around dollar yen. In terms of the crosses, not really many crosses are doing it for me at the moment. None on the top of my head. I do like Aussie CAD, but again, I feel like this is an opportunity for, again, maybe even 2 weeks' time. I really like the buys for Aussie CAD. Lovely breakout there. I'm looking at potentially some retests down at 0.9 or just above 0.9 and some longs to continue that uptrend. So I really do like that from a swing perspective. But again, that's probably about 2, 3, 4, 5, maybe even longer days away from developing. So no real need to discuss too much about that or prepare too much, because we just be looking at paint dry at this moment in time. But in terms of like intraday and taking advantage of the moment now, dollar yen looks really good to me. So that's where the focus would be, and targets back to 150.809. And I'll try and look for opportunities in the 15 as long as the pullback stays shallow. If the pullback's a bit deeper, then I'll look for maybe an entry on the 4-hour chart off this area here. And then stops below the low, targets back at the high. So it's either like an intraday pullback, something like that. Again, after a pullback, I'm not saying buy now, but after a pullback, and then looking for the buy. And I also will keep a close eye on euro dollar shorts as well. I like the momentum, really aggressive. I do think a pullback into this area will likely to continue, especially with DXY pretty much doing the same thing. Really strong move. I do expect a bit more upside back into 98.6, and potentially dollar CHF joining the party as well. looks really similar to the DXY, so pretty much the same opportunity. A pull back into the high or even this area below, and some buys move back into there. So yeah, very bullish on the USD. I do think there's a lot of opportunity there, and that's where my focus will be, dollar yen buys, but we'll see. We have reached the end of my segment, so I do appreciate everyone for tuning in and being a guest on the stream. So I do really appreciate that. But I hope you guys have enjoyed the stream. Thank you for watching, and hopefully I'll see you all next week. Take care.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.